Before starting the video, click the subscribe button and turn on the notification bell. Hello and welcome to House of Commerce. Hope you all are doing well. So today's lecture is based upon the requirement that having seen that most of the students find it difficult about the books of prime entries and they do not know about the purchase cycle, that how the purchases are made and how the orders are placed, then how the sales are ordered and they are received, and what are the types of cash books. So all we are going to discuss in the video, so keep watching and watch till end. So role of books of prime entry. Bookkeeping is the process of recording the financial transactions into the records of the entity. Now the transactions are recorded in the accounts and there is a separate account of each and every transaction. Now the individual accounts are not recorded in the books. Why is so? Because if you'll record individual accounts, say we have the customers Mr. X, Mr. Y, Mr. Z, and thousands of customers like this. So if you will record each and every customer particularly and singly, individually, that will create thousands of books of the company in a year. So all you have to do is to record that into the prime books, and then you shall record the prime books entries accumulatively in total to the journal or to the accounts. So this is the role of the prime book entries, that these are the entries, these are the records where the transaction is recorded initially, and then the sum of that accounts are recorded into the journal, and then the ledger, and then trial balance, and then ultimately into the financial statements. So hope you have got the idea that what books of prime entries are. Posting transaction. So what does it mean by posting the transaction? That means that whatever things you have recorded into the books of prime entries, you will post the same transactions into the journal ledger. Now there are thousands and numbers of books, so you cannot record the individual transactions into the journal ledger, so that you may have the less paperwork and all, and you may have to toil less. So all you have to do is to post the transactions to the journal ledger. And one thing to keep in mind, that journal ledger just makes all the only one account of all the transactions. So if you have thousands of sales contracts during the year, so you'll not record that 1,000 records into the journal individually. All you have to do is to make just one sale ledger, and you will post the total of the sale ledger to the journal ledger. So that means the posting of transactions. So what are the books of prime entries? Number one, sales day book. So this is the book which is used to record all the sales but on account, means which are receivable but not yet received. Then sales return day book. This is the journal which is used to record all the transactions which were returned from the same customers to whom you have sold on account. Then purchase day book. In other words, you can call it purchase journal as well. So purchase day book is used to record all the transactions, all the purchases made on account. Then purchase return day book records all the transactions made on account and returned to the same supplier. Then cash book. Cash book is used to record all the transactions made either on cash or through the bank account. Then journal. Journal means all the transactions of the above books of prime entries are totaled, and then a single entry is passed in the books, and that is called journal. Now let us discuss about the complete procedure in which the sales is recorded, and from the placement of the sales, from the placement of the order till the dispatch of the goods to the customers. So on number one, Sales quotation. The customer offers the buyer to buy some goods or to inquire about the goods, that what is the quantity and what is the quality, what is the price of all the goods and all. So these are the things which a buyer normally inquires. So that is called sales quotation. Then after that, he places an order. Then goods dispatch note. So when the company dispatches the goods to the customer, so before that it dispatches the dispatch note that goods are on the way to the buyer, so that he may come to know that the goods have been dispatched by the company. Then delivery note. When the goods are dispatched and they are to the premises of the buyer, so he has a note along with the goods that this is the price of the good and this and that quantity have been delivered to you. Then sales invoice. So invoice contains all the description about the goods and the price of the goods. So everything is written in the invoice, that when the order was placed, what is the quantity, what are the prices, and what is the quality of the goods. Then statement. Statement means the statement of amount, that how much is still owed to the customer, by the customer to the seller. So this is a statement is given along with the goods, that you have to pay this and that amount to the seller. Then credit note. Credit note means a note which is issued to the customer on account of sales return. So whenever he returns the sales, so a credit note is issued to him. So let us discuss about the complete purchase cycle from placing the order till the receipt of the goods. So first of all, if the production department is running out of stock, so what does it do? That it places a requisition to the company that we need this and that quantity of material to produce the goods. Then company places a quotation to at least 3 of the suppliers to purchase the goods. Then obviously the company selects the lowest bidder to provide the goods. Then purchase order. Then selected supplier is placed by an order to supply the goods to the company. Then goods receipt note. When the goods arrives to the company issues a note that goods have been checked and they're up to mark. So company issues a goods receipt note and acknowledges the receipt of the goods. Then purchase invoice. So purchase invoice is a request from the supplier that the goods have been given to you and you have to make this and that payment. Then statement. Statement means that a record contains that the company have to pay this and that amount at that point of time. At the point of delivery, the company has to pay this and that amount to the supplier. The cash book. So before starting the cash book, I may tell you that we will discuss it in detail and by making the cash books and all that in the next videos. But here we just have to discuss what is the role of cash book in this book of prime entries. So the cash book is used to record all the transactions relating to cash or the bank account. So there are types of cash books. Number 1, single column cash book. So single column cash book means that only bank column and cash column is given there, and you record the receipts and payments from both of them. Then 2 columns cash book. So 2 column means where the receipt and the payment either from the cash or from the bank both are given. Then 3 column cash book. 3 column cash book means that purchase discount, cash payment, cash receipt, bank payment and bank receipt, and sales discount column is given. So these are 3 columns on each sides are given. Then petty cash book. Petty cash book means to record the petty expenses. petty expenses means which are day-to-day expenses of the companies to purchase the stationery, to pay for the petrol and other charges, to pay for any of the purchases of grocery items for the kitchen of the company, and such items are included, which are petty but not the larger expenses and minute expenses of the company. Now that's all for today's lecture. If you have any question regarding today's lecture, you can put your question into the comment section and that shall be answered into the next videos. Till then, good luck.